Welcome back to the YieldMax investors, or those just looking to get to a little bit of more knowledge on the YieldMax funds. Max has their 4 distribution classes, groups A, B, C, and D, that pay every week. So they're about 1 month apart in duration. So group A will report in 1 week, and then 4 weeks later report again. Gives it about a month between them, roughly. Some months it might report twice, but jumping right back into it, YieldMax ETFs reported their Group A distributions on their X.com account. So if we go to it here, we can see this morning they announced the distributions, and just to jump into those, initially they all look pretty good, to be completely honest. I'll take a look at them from a percentage basis here shortly, but let's see. We got feet, $1.44, Snowy really good at $1.30, Fibby 97 cents, YBIT coming in very solid at 87 cents, TSLY 78 cents, TSLY jumping up to 76 cents. Right off the bat, Snowy, YBIT, TSLY all looking phenomenal. LFGY 47 cents, XOMO 39 cents. Just to know, the ones that are weekly are reported every week, whereas the single stock exposures or some of these other ones that don't say weekly are reported on every 4-week basis. So roughly on a monthly basis. Chippy 38 cents, that's per week. GUI 34 cents, Crash 31 cents, OARK 31 cents. And then all the weeklies here, GPTY, SDTY, RDTY, QDTY, right around the 25 cent range. Then YMAX and YMAG, pretty similar. Both seem to jump up right around 19 to 20 cent area. YMAG actually eclipsed YMAX this week. And then Ulti, 10 cents, pretty standard. Always seems to be in that 9 to 10 cent range lately since going to a weekly payout. But yeah, so those are the payouts for this week. I know just by looking at them, the percentages look to be pretty good from what the ETF prices are trading at right now relative to what the percentage basis is for the distribution. Just looking at some of the commentary, great ROI from TSLY and YBIT. Yeah, I agree. I pointed that out right away. And then, of course, there's a lot of YMAX owners. That's getting up to 20 cents a week. Very nice. I am also a fan of this LFGY. It pays on a weekly basis, been paying over right around like the 47 cents per week, although I think last week it was like even in the 70 cent range. So that one's been very good on a weekly basis for those looking to add some weekly exposure and also get in that crypto space. Yeah, and then I guess so jump over to my website quick. For those who followed before, I got a little website here. YieldMax. I intend to look at some of the other funds that do these ETFs as well. I haven't gotten to that yet. But on my website, I don't look at the weeklies yet. I mainly focus on the monthlies. I'm going to add the weeklies here shortly. But Group A, or just this recap from Group D from last week. I just want to go over this. Group D was very good. We had Misty with the phenomenal almost 10% return for the month. And these little bars over here, they show you the percentage return, which is calculated based on the most recent dividend or distribution for the month divided by the current ETF price. So you saw last week it was 3.72 to almost 10%. This week we got, if you click Group A here, maybe I'll zoom in a little bit so it can be seen a little easier. But so we got Group A, it's 2.79% to 7.77%. And overall, there was 3 stocks, right, at like that max of like high 7, almost 8%. As I know before, we had Snowy, TSLY, and YBIT all coming in. Like, I guess if we want to filter this based on percent return, we had Snowy at a 7.77%, TSLY at 7.69%, and YBIT at 7.66%. So all basically the same. Very solid for a monthly return perspective to see that out of these more volatile names. And then, unfortunately, Google down at the very bottom. Sad to see Exxon actually had a higher percent return on its distribution than Google. I think Google would be a little bit more volatile than something like an Exxon, but maybe I'm wrong. But Google may be a little disappointing. But the top 3 ones, Snowy, TSLY, and YBIT, all very solid. Snowy's actually been a very good performer if you look at it since its inception date, what it's paid, and how the actual underlying ETF has done. Yeah, so if you want to jump into one of the individual ones, we're going to Group A here. You can see we got all the options. So if you want to look at Snowy quick, this one kind of, I don't know how many people own Snowy. It's based on the underlying stock of Snowflake. But when you do a compare here, or if I go back and I look at when I do have the actual inception date noted in the second column here. Snowy came around in June of 2024, so it's almost been here a year. So since then, if we just look at that one quick, first if we look at just the distribution per share, so $1.30, clearly I said it was good, and as you can see based on past months, it's the second best payout it's had since its inception date. It did have one of them over here, it was almost $1.71, but yeah, very solid from both a distribution flat rate as well as a percentage basis. And then as a comparison to how it's been doing, so if you were to start with $2,000 in it roughly a year ago, June of 2024, you can see the different scenarios based on just owning the underlying Snowflake or reinvesting your dividends in a YieldMax fund, or just owning the YieldMax fund without reinvesting your dividends. If you would have turned 2,000 into either 2,700 in the worst case scenario, or if you would have reinvested your YieldMax dividends to have 2,900. So in this case, the YieldMax fund offered by YieldMax actually has outperformed the underlying stock of Snowflake, if assuming you would have reinvested all the dividends back into the SNY ticker. Another way you can look at this, so you can see in the last year, man, that cumulative dividends really piling up. Already received $10.39 in dividends since inception date, or over 50% of your initial investment you already received back in dividends. That's assuming you didn't reinvest your dividends, which if you would have, it would be even larger. But yeah, nice steady climb for Snowflake. Another way to look at it, purple line here is kind of your total return on the Snowflake. Yeah, I don't know. Just by looking at this, for people looking at maybe getting some more of these funds or diversifying these funds, if they already have them, Snowflake might be one that is not owned a ton, but is one that's been doing very good lately. And even the underlying ETF price, SONY, opened at 20, currently is almost 17. Down a little bit, but overall, the actual YieldMax ETF's been holding its value pretty well as well, which sometimes that's a negative of these funds, is they lose their ETF base value in favor of large dividends. But Snowy has held up pretty well, as you can see from the blue line. And then one of the most held ones, TSLY, of course, here. Tesla, the actual underlying stock, is rocketing back ever since like the tariff pause. I'm probably one that's bullish on the underlying stock of Tesla. I think the new robotic arm of the company, as well as robotaxis, is really going to send it into the stratosphere, both fundamentally and just I think momentum's going to take it higher, and then with time it'll be backed up by fundamentals. So the stock might be a bit volatile, but the company itself, I don't know if there's a ceiling on that. I think that thing can keep going. But as far as the YieldMax fund, you can see the distribution, 76 cents. I actually got an average line in here as well. Pretty good considering, I guess if you compare it to the last 5 or so months, it's quite well at 76 cents. And then as far as a price plus cumulative distribution, so TSLY is one that it did do a reverse split. So even though it opened at 20, I assume it opened at 40 because they did have a reverse split like midway through. But you can see since the inception date, the cumulative dividend has added up to be pretty stellar. Yeah, I'm trying to think what else you want to look at here. Clearly owning the underlying stock of Tesla was the better option. But recently, the reinvested dividend option has started to climb up as well. You can see the YieldMax fund without reinvesting your dividends. You don't get as high as highs, but you also don't get as low as lows. So when Tesla went from, what was it? If I look at just the underlying equity price, when it went from over 450 down to under 250, clearly the YieldMax fund didn't have that same. It went from a cumulative total of 47 down to 39. That purple line takes into account the cumulative dividends plus the underlying ETF price. So maybe something that a lot of people don't look at, but that's how I would assess the performance of these funds over time. And then YBIT, another crypto-related ones. All the crypto-related ones, these YieldMax funds have been phenomenal lately. But YBIT distribution share, There it is, boom, jumps from 41 cents to 87 cents, so 2 times jump there. And the underlying equity prices started to come up, and there's your comparison between the 3 kind of different strategies one can take on this. The reinvested dividend option has jumped over the non-reinvestment dividend option within kind of the last reporting period. And then, of course, my favorite chart, the assessing it from a price plus the price of the ETF here in blue, plus the cumulative dividend. I love to see that green just keep stacking up, but overall we are positive on this investment. Clearly had a decline there, what would we say, late 2024, but since has rebounded. And if we look at initial investment, 2000, we're right in the 20 range. We're now at 21.83. So even though the underlying ETF has gone from 20 down to 11, the cumulative dividend stacks in there at 10.48, giving you a positive return on the total investment. That said, going into the future, I would expect better out of this fund. I think YBIT has some potential going forward. I am somewhat of a crypto or Bitcoin backer, so clearly I have a favor toward these funds. But yeah, I just want to go back here. So this total return column of Group A, if we look at it, trying to assess what's the best Group A fund that's been offered since inception date, since the relative inception date of the fund. You can see that TSLY appears the highest, going from 40 to 43, but as a percentage return, we got Snowflake started at 20 total return. So the total return would be the price of the current ETF plus the cumulative dividend. So Snowy has turned $20 into $27.21, assuming non-reinvested dividends. And then some of the other ones, to be honest, are all right around where their inception date was. So overall, Group A here, probably not the best performing group from the YieldMax perspective. Most of them are positive with the exception of Exxon, which looks like it's down 1.65%. I filtered based on total return. Perhaps I should have filtered based on total return percentage. So there we go. We got Snowflake number 1, YBIT number 2, and TSLY and TSLY. Overall, I will say that this total return percentage, not an apples comparison, because it's based on since the inception date. Some of these funds have been around longer. Clearly, the ones that have been around longer, you'd expect to have a better total return percentage if they're a better investment. Snowflake's actually been around. I guess the TSM's been around since August of 2024, where Snowflake is June of 2024. All the other ones are in the 2022 or 2023 range. So overall, just looking at Group A, probably not the best group to invest in unless you got in a Snowflake. But going forward, I do Snowflake. I like YBIT. I really like TSLY, although the nature of these funds, if TSLY has a large correction and then a quick snapback, these funds don't fare very well. So sometimes Tesla, the underlying stock, is subject to that kind of behavior. So perhaps be on a lookout for that. For those who own TSLY, I think I'd recommend buying the TSLY YieldMax fund, but then also supplementing that with actually the underlying Tesla stock. That way, when you do get the down like the quick downward turn followed by a quick upshoot, I guess your YieldMax fund doesn't get completely destroyed in that process. Because as I noted before, the YieldMax funds, they participate in the downside, but often on the upside, they might be capped. So if you take the downside all the way down, and then you get a quick snapback, but you only participate in half that, clearly the fund doesn't do very well from a total return perspective. But I think owning some TSLY, along with the underlying Tesla stock, I think that is a good approach for investors who are scared of that scenario playing out. But anyway, I guess those are the Group A distributions this week. As I've always noted, anything over 5%, very good. And in Group A this month, we had 3 stocks over 5%, with TSLY just under 5%, about 4.91. So really good return for the group. I hope to see more of it going forward. Thanks for tuning in.